The trend is your friend. What you don't usually hear, though, is the rest of that statement, and it is until the end. You don't want to be in on a trade or an investment, a practice one, or any one, period, of course, when it ends. You want to follow that trend until that trend is no more. And how do you know when the trend's ending? Well, that is to do what we do every day. Follow the charts, practice trade, do all you need to do to learn everything you can learn about the markets. And you do that every day, at least 10 minutes at a time. If you're not interested in doing that, you don't need to go any further with us. If you are, and you want to become a charting master, which is the key to understanding movements of stocks and ETFs, you're at the right place. Let's jump into the markets. We see that the S&P 500 and the NASDAQ 100 are both up for the day. We see 20-year bonds and gold down. Let's first jump, as we always do, into the S&P 500. We always start out, and remember this, always start with the largest chart and work your way down. Now we start with the weekly chart. Remember, once a quarter, and that will be coming up at the end of March, we look at the quarterly chart because we have a magical chart that tracks the S&P 500 quarterly, and it is phenomenal, has been incredibly accurate going back over 20 years. When to get in the market, when to get out of the market. And I want you to do long-term practice trades using this chart. We'll be talking more about that later, of course. All those trainings are available to our Patreon members, plus the latest chart review that we've had is also available too. You want to know more about being a Patreon sponsor? Go to chartingwealth.com and look under, well, if you're getting our emails every day, if you're already signed up, you'll see it in the show notes. If you're a YouTube subscriber, you'll see links in the show notes to how to be a Patreon supporter. Also, if you haven't purchased our book, Charting Your Way to Wealth, and you want to support what we do here at the channel, that's your first step in learning what we do and understanding how we do it. We spent a lot of money spiral bounding that instead of just a regular book so that it's easy to use, easy to hold open on your computer as you go through the charts with us every day. Okay, what's going on? Well, we see 6 weeks in front of us right now of this weekly chart going up. We had a weekly vertical crossover on the S&P 500 back on the 25th of January, and we continue to see the green candles building going into the third week. And again, over halfway through that third week at the close of the market on Wednesday. And we have another up candle that's forming. Price movement is above it on both the 2-day and the weekly. Derivative oscillator gaining upward momentum. Price percent oscillator actually spiking up more than it was the prior week so far. We don't call a candle until the end of the time period. And for the weekly chart, that's 2 more days, 5-day candle. Typically, unless we have a short market week. Don't forget, the market will be closed next Monday, the 18th, for President's Day. The market is closed that day, stock market. So we will not be doing a broadcast that day. We will be doing one over the weekend, a comprehensive review and forecast for Tuesday, of course, when the markets are back open again. But we see a green up candle for the week. Things are looking nice on the big chart. 2-day chart, what do we see? Derivative oscillator continuing to lose energy. It topped out all the way back on the 2-day candle ending the 18th. That was Friday the 18th of January. And then, of course, it went sideways for 3 candles, up 3 candles, sideways 1 candle, went up on the latest full candle. That was on Tuesday. And, of course, the current candle is the first day of the latest 2-day candle. Nice big up candle. Again, price movement well above the weekly and the 2-day. Price percent oscillator still heading up, but like we said, derivative oscillator losing some momentum. Go to the 4-hour chart. What do we see there? Well, of course, that 4-hour chart crossed over. We've got some weakening in the afternoon with a red open box candle. Want to understand the Heikin Ashi candlesticks? Great training at chartingwealth.com. You can find it under the training section at the website chartingwealth.com. Encourage you to take that to understand how the average pace candles work. But again, we are seeing strong up movement in the morning, bit of a pullback in the afternoon. S&P up 0.32%. So again, jumping in point for another crossover going up was there. So again, something you might have looked at if you were waiting to find a time to jump in. Of course, we hope to see things with that much momentum continuing to push things up. if you hadn't stayed in a movement where you had gotten in earlier. Again, 2-day and the weekly are still decent looking for us. 2-day and the weekly still quite decent looking for us. We'll wrap up that latest 2-day candle when the market closes on Thursday. Excuse me. Let's keep moving along. We see the Qs not up as much as the S&P 500, 0.07%, but again, nice up candle for the week. We see the wick on this candle actually making it higher so far in the week than the prior one. Prior one topped out at 171.37. This one topped out, well, yeah, 172.16. So again, stronger up movement. Derivative oscillator shows that as it continues to gain momentum. Price percent oscillator heading up at a nice click. So the weekly candle is strong. What's the 2-day candle? It is strong also. First day of this latest 2-day candle. Derivative oscillator still losing momentum since it peaked back on Friday the 18th, just like the S&P 500 of January. And we see the price percent oscillator losing a little bit of energy. Again, still heading up, but not as strongly as it had been if we go back to something like the 2-day candle ending on the 6th of February. So we do continue to see price movement heading up, though that's nice. Now, as we delve a little deeper, look at that 4-hour chart. Looked like it was going to have enough momentum to cross over strongly after the morning up move, but a bit of a pullback in the afternoon with a red open box candle. Still a wick on top, but that open box candle signified a lot more weakness in the afternoon. Derivative oscillator is still oscillating upward, but that price percent oscillator stalled a little bit. So again, continue to watch and see how this is going to settle out on Thursday. But again, 2-day chart still strong, weekly chart still strong. Now, let's go back to our weekly chart and go to 20-year bonds. What are 20-year bonds doing? Well, they've been moving up over the course of these last 3 weeks as far as the Heikin Ashi candlesticks go. But again, so far this week, price movement has not peaked above where it did the prior week at 122.47. So far, 122.18. We see the derivative oscillators continuing to lose momentum since it peaked back on the weekly candle ending Friday the 4th. And again, a sideways slide mostly, starting to tend up at this point, but the price percent oscillator flat. So it's lost all of its up movement. It's just flat with the derivative oscillator decreasing. So let's just continue to watch, see what we see. Now, of course, when we go from the weekly that's still in a confirmed up move, the 2-day, of course, in a confirmed down move, and the first day of this latest 2-day candle, pretty big, well, not a big down candle, but a change into a solid red down candle with a wick on the bottom. So that doesn't portend well for continued up movement. We see that the price percent oscillators gained some downward momentum, and that derivative oscillators also gained downward momentum. And of course, we go from the first day of the latest 2-day candle to the 4-hour chart. We see down movement in the morning, bit of a recovery in the afternoon, but the derivative oscillator gaining momentum, price percent oscillator spiking down. So again, until things settle out on 20-year bonds, 2 days in a down move, weekly's in an up move means we don't have a trade. We're just waiting to see how things shake out and if indeed a move is presented to us in the future. So we go from TLT, 20-year bonds, to our last chart, gold. And of course, when you look at the gold chart over and over again, I encourage you to look at how beautiful that weekly chart is. It's a total trading chart, is it not? If you would have practice traded this over the last 2 years, you might have had one time back in mid-year 2015 that things didn't look so beautiful. Other than that, it has just been a beautiful, beautiful chart. Why? Because according to our chart, gold's pretty easy to track, isn't it? And you should be practice trading it every single chance you get, particularly on the weekly chart. That's the power of the weekly vertical crossovers. So what do we see going on gold now? Well, the derivative oscillator peaked, its highest peak since the weekly vertical crossover, back on the week ending the 11th of January. Then went sideways pretty much for 2 weeks, up for 2 weeks, and now has been going sideways for the last week so far. We can see that reflected in the derivative oscillator losing lots of momentum and the price percent oscillator almost flat on that weekly chart. As we look at the 2-day chart, we of course had a 2-day crossover going down for the last full candle. That was on Tuesday the 12th. And the first day of this latest 2-day candle, green spinning top means indecision tending up, but nothing spectacular. Derivative oscillator gaining downward momentum. Price percent oscillator. Now you might be asking, is gold going to rotate over going down on the weekly chart? We don't know. It always starts with a smaller chart, of course. Little waves form big waves, right? So that's what we work our way to. Let's look at the 4-hour chart. It crossed over going down all the way back on the morning of the Tuesday, the 5th of February, and it's continued to track along sideways and down since then. We can see some up movement in the morning on gold and down movement in the afternoon. Gold down for the day, 0.40%. Derivative oscillator gaining downward momentum. Price percent oscillator jacking over going down. So again, we'll wait and see how gold shakes out. But I hope I've piqued your interest in paying attention to gold if and when in the near future, if this thing rotates back over going down on that weekly chart. What will happen? Well, it'll probably go down for quite a while, just like it did before when it peaked out and rolled over back on. And again, that weekly vertical crossover was quite a portent. Things sort of dragged around for a while, but it did show us early on that gold had peaked all the way back on the week ending the 26th of January 2018. And then we had enough momentum to pull things over on that chart the week of ending the 16th of March 2018. Then it went up for around 4 weeks. And then, of course, the hard charging downturn occurred and it slammed down from, even if you got in at the worst point, 124.21 all the way down to a low of 111.06. Pretty good in anybody's book, isn't it? Over the course of, 6 months or so? Not bad. And you can go back in time and track over and over and over again how accurate that weekly chart is. That's what we look for, friends. Whenever you see charts like that, feel free to share those with me. Thanks so much. Buy the book if you haven't already. You want to support what we do. And if you want to be one of our best friends, become a Patreon supporter. Give us a donation. We got lots of great stuff. Short chart training to share with you. Bitcoin chart training to share with you. Quarterly chart training to share with you. And of course, the monthly Q&A that you can participate in. And we also take your suggestions for stocks and ETFs you'd like us to review with you and give you some hints and ideas as to what we see. Remember, we're not a stock calling service. We're an education firm. We want you to train with us, practice trade, use our trade worksheets, use the daily market worksheets, the weekly market worksheets. If you're not willing to spend at least 10 minutes with us a day, pay attention to these markets day in and day out, don't tune in. We really, you're wasting your time and ours. But if you are committed, tune in every day, and we'll be here to help you in every way possible. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.